Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. You can pick it up there, subscribe to it. You can be notified of any new content. Makes it nice and easy. As far as easy, it wasn't easy on the markets today. Dow Jones down 330. I mean, you can go through the numbers here, but it was anywhere from about 1.85 down to 1.44. The Russell, one more time, outperforms. And this has pretty much been the case for the last, I don't know, it's been a good week or so now. The Russell's outperforming on the downside and on the upside. Is that a reflection of the dollar? Is that what's really going on here in terms of these indexes and the outperformance of the Russell? If you remember last year, the Russell couldn't buy a break. Never could outperform. It was actually the one underperforming all year long. Now it's the flip side of that. And, when I say, is it the dollar? Well, a stronger dollar, when it moves as fast as it has, is not good, for the large caps. Unless they've hedged really well or they're able to convert their exchanges, from overseas quickly, they're losing. They're losing profits, and that brings their margins down. That dollar was up again today. Actually, that's one of the highlights today in terms of if you're a bull, and because it looks like it kind of spiked a high and is probably going to try to give it up. It was finishing up ABCD structures on the weeklies and the dailies. But that big, not so much a big spike today, but that spike up the last few days in the dollar has put a lot of pressure on commodities, and once again oil tanks down another buck on the USO. I don't have the spot in front of me, but I believe West Texas Intermediate traded under 50 today, down 5% today. Folks, this is on top of a 45% move already in the last 4 or 5 months. This thing just continues to get pummeled, and it was a strong, hard move down in the oil market that really weighed on equities right off the bat. And let's pull up the oil market here. Right off the bat, that was the story. As you can see, volume starting to spike up again. It doesn't look like it's done, but at the same time, it certainly is closer to done than it was, because you've got some serious throwback here. Sorry about that. You got some serious throwback here on the oil market. So oil spiking down, dollar spiking up. You didn't get the spike down in the silver. You didn't get it in the gold. Matter of fact, you spiked the other way, and you spiked in the bonds. Bonds goes up, and bonds are actually trying to go for, at this point, go for their highs. And I bet nobody thought they'd see this again. But if I put it on the monthly here, the bonds are going for the highs that they set July 1st, 2012. That's the kind of run this has been on, and even though the ABCD structure here is done, they just keep chugging along higher and higher. That price point up there, 132.21, you're trading at 129.32, so you're less than 3 points away from the highs that I honestly did not believe we'd see again. I knew they were up there, but I just didn't think we'd see them. So bonds up again. Here's another one with the JJC getting sold down, so forth. So tough day in the markets if you're long. I had broadcast to members sometime back that we wanted to be light coming into the new year, because I wasn't so sure how it would shape up. Matter of fact, well, not I, but we moved more into cash as the year came to an end, and put ourselves in a better position. And you don't want to have all your eggs in the basket, in the market basket, when the market starts to take a hit. And fortunately, we're not in that position. And actually, we had a couple stocks today that actually worked out pretty good. But that's another story. Let's turn to these indexes now and take a look at them and see what kind of damage we got. I mean, there wasn't much in the way of positives. I've already hollered about the dollar. The other thing you can talk about is volume being light on the way back. S&P's coming into this low at 2018.98, right? That's kind of the support zone. You can see it came right into it, popped around on it, got a little bounce at the end of the day, not much. But you can see the volumes on the way up. Remember December 17th, that was the Wednesday. Thursday was it opened up on a small gap higher, and it just kept going. That was it Wednesday or was it Thursday, the Fed? It must have been Wednesday. The Wednesday was the Fed meeting. Oh yeah, it opened up and just kept going into the Fed meeting, and then got a big spike the next day, Thursday. So you're coming right back into that zone. Folks, if they're going to buy it, this is the spot, right? You would think this is the spot. So you got a big rollover. Now, if I think about this, and this is true on the weekly as well as the daily, if I think about this now, there is the potential here, if this thing does kind of find its low in here, set up an ABCD structure, take it up again. So, I wouldn't be getting, and that would actually take it up to about there, I wouldn't be getting so bearish here to think that, okay, it's all over and it's downhill. You've got some circumstances out there with this oil market scaring people, and oil at this point, in my opinion, is not trading off the fundamentals anymore. Of course, it wasn't trading off the fundamentals when it was 100, but it definitely isn't trading off the fundamentals at 50 either in 4 months. And I suspect that, at some point here, you're going to see the oil market find its bottom. Energy stocks do the same. As a matter of fact, the energy stocks are still bucking the trend. I mean, take a look at, we just looked at oil. Take a look at the XLE. That's not anywhere near the lows. Now, even the worst hit group, the OIH, isn't hitting the lows yet either. So when you're looking at oil making new lows, yet the energy stocks are not anywhere near their lows, right? You know that oil probably isn't reflecting a continuation move. If anything, it's getting close to some sort of a blow-off final. And so, when I think about it from that perspective and I look at these markets, it's like, okay, don't get so pessimistic. I know everybody likes to get pessimistic and think it's going to be the crash. And maybe this is the big turn. But, I think it's a little bit early to start thinking that. Here's another way to look at it. Bring over the weekly. This is the intermediate term time frame. That's not even going to print as a swing point low, given the way we're at now, if it comes back that fast, right? So to break a low, you'd have to come all the way down here. Now, if I were to do that, then I would start getting pessimistic. But we're talking about another, 100 to 200 something points. That's going to be a huge move just to get back down there. So if we break here, I'll start thinking about something different. Right, I'll start thinking, okay, especially if we, it's not just price, it's not just volume. Everybody likes price and volume, they talk about it. It's time too, and you have to think about things in terms of time. Let me pull this GSPC up here on the daily again. If we come in here, and I suspect, we have a good chance probably tomorrow to get a bounce unless we get, all just diving or something. If it bounces from here, and and we start thinking about it now, and we've already talked about it's a range trade, right? Because it's already broken this swing point high, so that's gone. So if we start talking about a range trade, okay, where could the range be? Well, we certainly have the potential for some sort of a range down here. We have that same sort of range there, and then you got the range at the top. So where would you think it would go? Well, if it does hold here, I suspect it's going to come back and test this range. It's going to take a little time. Maybe it's going to take 3-4 days, whatever. If it comes back up here and starts to test this range, What is that going to do? Well, 3 or 4 days later, then you have the potential for a failed bounce and an ABCD structure to take you down here. It takes time to get there. If I come straight down tomorrow, odds of breaking that are not very high. Even if I do, they're not very high to keep going. So if you want to be bearish, you want to see a bounce. You don't want to see it come straight down. You want some small bounce and then you break this guy. It takes time. You need time on your side. And so the bulls, are hoping for a bounce. The bears ought to be hoping for the same thing. Get a bounce, get a failed bounce, because this now, from what we just saw, right, this is the range. And if you take a look at the big high volume, what is it on? It's on this bar, which is at the bottom. It's the bottom of that bar, which is the top of that middle range. That's where the fight's going to be on the bounce. That's where one is going to learn what this market's made of. Is it going to continue in some larger range? Maybe this range, or wherever it is it going to continue in that range, or is it eventually going to break this bottom? And a failed bounce would set up that potential break. So that's what you have to worry about, not this first move probably off the top. Can it go farther? Can it just keep going? Sure it can. Anything can happen. If you want it to keep going over time, you need bounces along the way. Suck the people back in and then spit them out on the way back down. That's the way it works. You don't get big bounces. You don't get, good chances to get out. You get failed bounces. Usually, if the market's turning, you get one chance, at least one chance to get your out. So even if this is it, I suspect that still will happen. Let's take a look at the rest of these guys here. So here's the Dow. Dow looks pretty much the same. I don't see anything different there. The NASDAQ composite, NASDAQ fills that big gap that we were just talking about off the Fed bar. Trades into the top of this. Again, volumes are not there. 46.51.90, 46.52, so it closes just over it, so it holds over that area. NDX got into it, closed the gap, and actually stayed in there. And then if we go to the Russell, if I had something that I would be concerned about tonight, it would be the Russell. And I do want to see the bounce tomorrow from a bullish standpoint, because you got a failed test, retest, regenerate, bullish. I don't want to see that fail. Right now it is failing. If it holds again tomorrow down here somewhere, that would be a failure in my book. And that would say, okay, the Russell's in a range trade too. And if you watched the show last night, what was I talking about? I talked about we had divergence. We had some markets wanting to go up, some going down. If this stays down tomorrow, that tells me they're all range trading. I think that raises the ante for the possibility of a failed bounce. And so to me, that's going to be an important number come tomorrow. Overseas markets doing the same thing you see here. They're coming back and they're filling gaps. If we look at the OX markets, we already looked at the oil market, but let me show you that dollar. That dollar spiked. One of the numbers I thought it would get to was the 24.31. Spiked it, has some decent volume. It may go up there and test again tomorrow, but this is running out of steam in my opinion, or it probably is running out of steam, and that bar looks like it is running out of steam. Oil we already touched on. And let me see here. Let's look at the gold and silver. So here's the gold market. The gold market's holding in pretty good in this range. And let's look at the GDX as well. So the GDX is starting to spike back up. So you've got a nice range still going on. If you look at the weeklies on these, right, we still do not have the turn. But if they get over this swing point high, you definitely got something going. If they go sideways another couple of weeks and then this would turn into a swing point high, then all it would take would be a break above that one. That's what you're looking for. You need to see a turn to know something's happening, and you'd like to see it on the intermediate term time frame. Doesn't mean you can't trade them here. Matter of fact, I talked to the TA Todayers today, or actually yesterday, talking about gold with them, actually Friday, and saying that this market was setting up pretty nice, and there was a few stocks that we were looking at there. If we go back over here one more time to the other side of this, FXE getting creamed. Another big part of today wasn't just the oil. We also had this whole idea of somehow Greece was going to, break away from the European Union. Folks, you let one of them go, then they all go, right? So I can't see how that works. I can't fathom that. Now, maybe you can't salvage a Greece. I don't know. But, in my opinion, they're all in trouble. It's not just Greece. It's just a matter of time before some of this starts to crack. The thing is you got central banks and you got government institutions that are dead set on holding all these markets higher. That's their job. That's what they do. So, they're not going to give it up easy, just like they never give it up easy. And eventually you'll have another 2007 top 2008 crash. It will happen again, right? We're living in a make-believe world anymore. So, I can't fathom how this would go on forever. At the same time, it can go on for a long time. I remember in the 90s talking about that thing couldn't go any longer, and it went for 2 more years when I was talking about that. So, these things can go a lot longer than you expect, and I expect that these governments aren't going to give it up easy. FXE makes new lows. You got that meeting with the ECB 3rd week of this month. I expect this thing's going to continue to be under pressure. Today it came off those lows and kind of pushed a little bit higher. Maybe to get a bounce in here, but I suspect it's going to stay under pressure. The one that's getting a bounce is the yen. The yen is starting to try to bounce back up. It held a higher low, right? And I wouldn't be surprised to see it try to go back up here to this 83.5, 84 area and try to test the way this thing is trading right now. So, and that would coincide with the whole idea that the dollar wants to pull back. Finally, I want to take a quick look because I don't have any questions tonight. And if you do have questions and you want to submit them, pop over here to NeoTA TV. Just come down to this area. There's an area in here that tells you how you can send questions in. I'd be happy to entertain them if you want to submit some. And if you're going to ask about a stock or something, give me a direction, give me a time frame, and I'll do my best to answer it. I haven't had a chance to look at these yet, so I want to just flip through them and see what they look like. So the IBB was one of the few that held up today, did a doji sideways move. The housing stocks, home construction comes down. Yeah, it doesn't look that bad. It looks okay. Let's see what the IYT looks like. Okay, so that one's been in trouble for a while. Remember, you got the breakdown bar here. Folks, these bars are important, and this is why it's important to get over them. You had the big spike, ugly candle, just like we just looked at on the UUP, although this one had huge volume compared to the UUP today. That sets up a breakdown bar on the very next bar. Look at what it's done. It's tested it, can't get over it. Eventually it gives it back up. It's going to come after a swing point low now. And so IYT looks to me like that one wants to trade lower. So that's a negative. First two looked okay. Let's see what the SOX did. SOX holding up okay, so that's actually a big deal. That will help the NDX. XLB rolls over. That one's going to go after the lows as well. So that's another one that looks pretty weak. Energy, actually, given the way it traded today, doesn't look that bad to me. If I look at the bars it's coming into and the volume it's putting out on the way back down, yeah, I can go a little bit lower, but it looks to me like it's going to hold those lows. XLF sold off today. We got all the earnings coming out later this week. This just closes the gap. Looks like the indexes basically. XLI, and same sort of thing there. I don't see much difference in that. So those to me are just kind of neutral in the way they're trading. Same thing with technology, kind of neutral. They come back, they close the gaps, look just like the indexes. XLP, same sort of thing. Let me see what the volumes were back here. Yeah, that one was fine. XLK, XLI, that one also was okay, and the XLF also, that was closer, but okay still. Utilities coming back in. Okay, so they're coming back into the retest regen zone at price points 46.61. and it actually had retested already, so this is the second trip back. Volume is expanding. You got 21.4, you got 23. Yeah, that doesn't look too good. It looks like it can trade a little bit lower and do a better test of it. XLV, this one also has breakdown bars. This one's going to try to test the lows as well. So when I look at these sectors, and this looks like the rest of the indexes, the sectors, you got about three or four of them want to go lower. The others look like they're okay still. So all in all, it looks to me like we're probably going to get a bounce sometime tomorrow, would be my take. And then it's going to be all about the push back up. And do you get a failed bounce, or do you get over those, that zone I was talking about on the S&P 500 when we started the show? Do you get back over that, or do you fail? Right there at that, the middle of the top of the middle zone, right? We divided it into 3 zones. That looks to be the test, and I suspect we're going to see that test here in the next few days, and maybe we'll see it on earnings. Who knows? The earnings may be good enough. If financials come up, these are the strong. The financials, when they report, it's all the big, sturdy ones to start with. If they can't drive the market higher, that's not a good sign. So that will be a big test as this week plays out. All right, folks, I'm going to leave it at that. Thanks for joining me. Have yourself a great night, and I'll see you tomorrow. Take care.